Welcome to TheoTrade. This is Don Kaufman. Here we are, September 25th, 2017, doing the Theo night video here. Just a few minutes left to the closing bell with the S&P futures down about 5 handles, but today's trading session hasn't been so much about the S&Ps. Well, today has really been about the range inside of the Nasdaq, which I'm going to come to here momentarily. Bit of a rally back coming in the Nasdaq late in the trading session. Nevertheless, the Nasdaq is still down a full percent. One of the first things that I want to look at, though, before jumping into the Nasdaq and some of the issues and kind of the underlying theme here of those issues, I want to take a quick glance at the S&P futures, which, including the overnight trading session, have had a range from 25.04 down to about 24.85. So you're looking, okay, at about a 20-point range inside of the S&P futures. And you can see, again, the trading range during market hours was literally from 2,500, a straight shot down to 24.85. It's about a 15-point range. Why I'm mentioning this one-day range, well, it really resonates with me because I have tendency to look at how options price risk in the marketplace. And it's not often I say this, but the option markets, strictly in my opinion, are not doing a great job right now. The volatility is incredibly low inside of the SPX. And those are the options, again, that we typically look at. And what these lines are, for those of you that do not tune in on a day-to-day basis, okay, this is the expected move for the week, only for this week. And the expected move this week was right or just north of about 20 bucks. But if you look at it, it's plus 20, okay, or minus 20. So the week starts, let's say, right at about 2,500. It prices us capable of going down to about, what, 24.80 and up to a high of about 25.20, right? So that's the expected move. And that's good just through this Friday. But you start to put this into context, and you see, well, the S&P futures and the S&Ps, they almost moved inside of that range today. When you start seeing 12, 15, or 20-point moves, I think you have to start to worry a little bit over here. So I go over to the SPX, and I'm looking at the options, and I'm like, all right, so maybe this week the volatility of the markets has got it wrong. But then throughout the course of today's trading session, it really strikes me that the expected moves are still incredibly low. Now, seeing all of this risk, listen, the SPX option market, right? It sees the risk here. It sees that the Nasdaq futures are down 70. And yet still, we only have a $20 expected move for the remainder of the week. The reason I'm really hammering this is I want you guys to know, don't sell option premium right now and expect to have delusions of grandeur. You're going to be selling yourself into extraordinary amounts of risk. If anything, again, the remainder of this week, I will look at the buy side of the marketplace. And I wanted to start there because, again, I know people are going to focus, oh, it's Amazon, oh, it's Google, it's Facebook, it's Apple. I'll come to that momentarily. But this is the opportunity. Okay, the obvious is, yes, Facebook is down almost 5%. The opportunity is the fact that the expected move inside of the SPX doesn't really seem coordinated with the kind of action and the kind of volatility that we're seeing here inside of the trading day. All right, let's continue on from the SPX expected move. Let's go right over to the Nasdaq. Okay, talking about expected move specifically here with the Nasdaq. Now I'm going to zoom in. The Nasdaq expected move for those of you, again, that don't follow this on a week-to-week basis, the Nasdaq expected move this last week was right around $2. Okay, so this was right around a $2 kind of expected move over here again through Friday. The irony of that is we not only tagged the edge of the expected move, we went out slightly outside of it and came back in on this trading session. So it's pretty decisive. Listen, the Nasdaq is where the volatility is really emerging over here. Okay. Continuing on, again, these expected moves are incredibly useful, especially on an intraday basis. That's that same chart. All I did is just took the Nasdaq here from a daily chart, which again, you can see fairly extraordinary volume. You zoom it into an intraday, okay, and you can see us coming down, just literally going right through the expected move, bouncing back into it, coming through, bouncing back inside of the expected move throughout the course of the day. All right, now let's go to some of the obvious. What are some of the obvious? All right, everybody's looking at the tech stocks that are getting hammered over here. Okay, before that, let's go to the important. What's more important than Facebook being down almost 5%? How about we got some serious movement inside of the EEM today? The EEM, okay, emerging markets, very few people focus on this. They should. The reason they should, are you aware that this is one of the most liquid products in the entire marketplace? So here we have the EEM, 63 million shares, can't be wrong, right? Look at the option volume in here of almost 400,000 contracts. What is the EEM see? It's down 1.5%. Okay, my estimation over here, this is due to the strength inside of the dollar inside of the last trading session. The moment the dollar picked up, the EEM now is getting crushed. Keep your eyes on this. Okay, emerging markets are of critical importance down the road. So we have the Nasdaq, okay, that is under pressure. We have emerging markets under pressure. Now, again, you're still waiting for me to go to the text. No, there's something even more important than those technology stocks. Take a look at the Nasdaq 100. Okay, this is the advanced decline line. So again, I know a lot of people want to focus on the Apples, the Facebooks, and the Google. I'm looking at the Nasdaq 100, and you realize that the Nasdaq is down literally 1%. Okay, so all right, we're talking about the Nasdaq over here now. So finally we get to the Nasdaq. It's down in the neighborhood again of about 1%. But the advanced decline line, not only isn't it bad, we don't have anywhere near full-blown correlation. People, don't look at this as a positive. Look at this as an extraordinary negative. Why is it a negative? Because you have a product that can fall by 1%, okay, when there's what? There's still 36 stocks in this index, okay, that happen to be higher. What's even crazier is when you start looking at the S&P 100. You look at the S&P 100, again, don't take this as a positive, take it as a negative. You know the advanced decline line here, this is why I'm recording this still with a few minutes to go to the close. The 80 line is positive over here, but we're under pressure, okay, big pressure. There are contrary indications all over. All we know is that the stocks that have led this market substantially higher are no longer just under pressure. They're under full like duress right now. Okay, so let's get to Facebook. What is there to tell? It's down 4.5% right now. Not exactly a big news story that's flashed out on this thing. It just hasn't been and had not been impacted. I've been talking about this, okay, over the last few weeks, how ultimately Google hasn't performed well, okay? Amazon lately hasn't performed well. In fact, if you take a look at Amazon, and again, everybody talks about Amazon, well, take a look at year-to-date percentages. Amazon now is up, and again, I'll kind of highlight this for a moment, but Amazon is up about 25% year-to-date. You realize, okay, there's some people that purchased it up here. The thing was up almost 45% year-to-date. You're looking now, okay, at almost a 20% decline from highs, okay? This is a huge give back. Now you're facing similar pressures in just what? You got one bad day. And I want to hammer this into you. What one bad day can do to you, not only psychologically, but can do to returns on an entire year. Here's an underlying that was just sitting the other day up 48% year to date. Now it's sitting up 40% year to date. And you have to make a decision as a portfolio manager. Do you want to pull the trigger? Well, I got news for you. Portfolio manager or not, you're near the end of the quarter. And the portfolio managers, you would think they would be less likely to want to sell this product. Okay, the volume out there, it is nothing less than monumental inside of Facebook. So this does not paint a very pretty picture at this point. Now, coming into Google, it's going to close in and around the 933, but we got dangerously close, and I will continue to point this level out, dangerously close to the 920 level. At 920, inside of Google and under, and I'll make this again abundantly clear here. This happens to be that 920 line in the sand for Google. Cracking underneath it, I think that's the signal ultimately that the entire S&P 500 and again Nasdaq are going to be under some serious duress. Now, I'll give you one other look before I show you an interesting trade out here. Okay, one other interesting look is this is what I kind of call the monsters of tech. It's Facebook plus Apple plus Microsoft plus Google plus Amazon. Recognize if this were its own index, there's the closing bell. If this were its own index, they're actually down on average of about 2%. Again, the big names in tech are down almost 2%. The rest of the marketplace at this point, it's that's similar to what we keep calling the shell game. This game of like musical chairs is still going on, okay? Whereby, listen, did you see any selling today inside of the financials? Absolutely not. Look at the Russell at the end of the day. Now, we happen to have a short position that we already established inside of the Russell. If you're not in a short position in the Russell, there's an opportunity. What do you mean there's an opportunity? Well, you already see the Nasdaq falling, right? If the rest of the market's going to start following suit, you pick the strongest product out there. We did the exact same exercise last week in terms of Apple. I told you last week if Apple continued to fall, right? I told you literally last week, if Apple continued to fall, we didn't want to short Apple into the hole. Instead, we wanted to look for short positions where? In Google, which worked, or short positions in products like Facebook, which is absolutely working. At this point in time, if you're looking like, I'm getting a little nervous, I want to get short over here, what can I possibly do? The Nasdaq has already fallen. Oh, the Nasdaq's under some pressure here, but that's when you have to start to look towards the Russell. Last, but definitely not least, let's go over to the VIX. Why am I going to the VIX? No, not to look at a VIX chart. One of the largest trades ever done in, well, really history of the markets was done today inside of the VIX. And I know there's going to be a lot of news, a lot of media about this particular trade, but you can see the total volume inside of the VIX today. Check that out. 2.5 million contracts traded. Okay, that is the equivalency of about 3 times the norm versus the previous 5 days. So what was done inside specifically of the VIX? You can look in time and sales. Look at that. Right there, somebody traded 500,000 contracts. Well, I'll actually show you the trade in a little bit more detail over here, but we'll open up the December options. I've got to open up a ton of strikes in this particular case. Go ahead and open up some 30 strikes. What the trade amounts to, okay, it effectively appears to be selling these 12 puts, okay, selling the 15 calls and buying twice the number of the 25 calls. So again, we'd be short these little monkeys, short these little monkeys. So for the most part, you're selling these for 80 cents, you're selling these for maybe $1.80, you add it up, and it gives you enough capital to turn around and buy a whole lot of the 25 calls. Now, you may look at this as a massive bet that the markets are going to collapse, because if the VIX explodes above 25, whoever this trader happens to be, or this is most definitively a trading firm, because you have to realize there are hundreds of millions of dollars at risk in a trade like this. And, they stand to profit a lot. I don't look at this necessarily as an outright bearish position, okay? Again, this could very well be a hedge against a long portfolio. This could be a hedge against the volatility futures. This firm may have gone out and sold tens of thousands of contracts in the volatility futures. They could be taking short positions, maybe in something like the VXX. It is too multifaceted to even consider why somebody did this trade. But the bottom line with a trade like this is you have to realize people are now stepping out, okay, and making phenomenally large trades based on whatever you want to call this, a fear of volatility going higher, a hedge that volatility go higher. Just the fact that a trade like this is being done, okay, should give you a little bit of room to, worry, if you will, because again, here's a trader that is buying, and you see it, 500,000 plus 25 calls for December. By the way, they also happened to roll them, okay? They rolled this from a previous trade that was done. So this is one that's been going on for quite some time. Ah, there it is. They rolled it from the OC. You can see the October trade. The exact same trade was traded today. So they took the trade, moved it from October, and they moved it into the December timeframe. With that, again, a lot to think about here on a Monday, where we started the week off with a little bit of bang in terms of volatility inside of the Nasdaq. Thanks everybody for joining us at TheoTrade. Have a wonderful evening. Bye-bye.